Alibaba is seen by many to be the Amazon of China. Like Amazon, it started off with e-commerce, which is a big part of the business still today, but they also have growing businesses across finance, social media, and cloud. Today I have with me Chi Keng, who is an Alibaba investor who covers the stock extensively on his YouTube channel to hear his views about the company and his investing philosophy. As a bonus, we'll also get his outsider's perspective on Tesla, which I know many of you invest in. Welcome back to Investing with Daren. Click subscribe to stay updated to more interviews like this. Chi Keng, what should the audience know about you?
Okay, hi everyone. My name is Chi Keng. So I'm extremely thankful for this opportunity to be on Daren's channel. I think, like Daren himself, I'm a local small-time YouTuber. I run a channel or investing channel surrounding Alibaba stocks specifically. I do share a few analysis about other companies like Facebook, for example. But I think I still do have a core focus in understanding Alibaba as a business. What are they doing? What are the different fundamental changes? And I do follow very closely to certain developments, specifically when delisting is a problem, when there are VIE structures concerns, and all the many other good stuff and fun stuff with Alibaba. So yeah, that's about it.
I'm going to pretend I know what VIE stands for.
Right.
Please educate noobs like me.
Right. So VIE, I think I'm not an expert as well, but I think VIE stands for Variable Interest Entity. So it's essentially a structure written or underwritten by the government, stating that because foreigners cannot buy local shares or cannot have a shareholding in specific Chinese internet companies because of they're afraid that companies do pander to foreign investors. So they created this entire instrument and vehicle to try to raise money and raise funds from foreign investors specifically. But of course, there are legitimate concerns surrounding you are not an actual shareholder of the company, it's just a contractual agreement. But I'm sure you can explore, and I actually did explore extensively about this topic on my channel. So quick plug and shameless plug, if you're interested, you can visit my channel. But there was a very interesting insight from the article from Crane Shares. Crane Shares, I believe it's one of the investment arm and investment management company. They actually invited a top private equity Hong Kong lawyer to talk about the VIE structure much more in depth. So I think I can pass you the link, and you can lead your fellow audience there if they're interested. Yeah.
That's just one small practical example of how much research Chi Keng has put into Alibaba. So let's begin by saying that you've got very early exposure from your dad on investing early in your life.
Right.
And you look for companies with a good risk-reward ratio.
Right.
What specifically about Alibaba, among all the companies in the world, drew you in?
Right. So maybe just to provide a little bit of a background context, right? I wouldn't say I invested very, very early on. I think I started when I was around 20, 21, and I'm 24 this year. Yeah. So I started off like a lot of Singaporean investor. We invest in blue chip Singapore companies like your DBS, your OCBC, your Keppel, and your Sembcorp Industry. Those are all national and household brands. And we have that innate feeling, and we have that innate trust in the government that, hey, if there is any turmoil or if there's any recession, the government is definitely going to bail them out. So in this instance, maybe SIA is a good example during the COVID pandemic. Yes. So thereafter, I think after quite some time, I was venturing into some other space, like the US and Hong Kong market, because of the volatility and the higher potential capital returns. So in this case, I after the pandemic itself, I started looking into the US market. So I think one misconception about myself is that a lot of people feel like I'm supporting the CCP or I'm a big China bull and I'm blinded by my love for China. I think
that's what China bulls say.
Right,
to disarm you.
But the funny thing is, when I started investing, like Daren, I actually do invest in Apple. I did bought a bit of Microsoft, JP Morgan. All those are all strong blue chip companies as well. But then I believe a lot of us know that we all enjoyed the ride up. They appreciated quite substantially as well over the years. And this had me thinking in terms of a risk reward perspective. If I want to find, or if I want to move on to the next investment, I'm more opportunistic in nature. So I want to find the next best adjusted risk reward company or instrument in this case. So this is just my own perspective on. I pivoted from Singapore stocks to US stocks, and then now I'm quite heavily invested into Alibaba. So back to the question on why Alibaba specifically, right? Out of the thousands and thousands of companies, I think for one, the macro environment surrounding the basket of Chinese stocks is I won't say that it's totally illegitimate. So a lot of the concerns are legitimate in nature. There are a lot of like, oh, what if the government is going to destroy the company, all the different new regulations and all the crackdowns and stuff like that. It's true. I think I'm not going to debunk that and say that, oh, you guys all don't understand. You guys are all, you guys don't know what you're talking about. I know what I'm talking about. I'm not that ignorant. But I think from the perspective of a valuation, that's one, it's cheap. But being cheap is not a good company. Number two, if you actually do research deeply into all these big tech companies like Tencent, Alibaba, the core fundamentals of the business are still intact, albeit slowing down. That I totally agree. But sometimes the best company in the world will still have to have. There still needs to be a proper valuation to evaluate those companies, because regardless, even Tesla, some people might not think that Tesla is the best company. You might have some people think that it's Microsoft or Google, Alphabet. There has to be a valuation in order for us investors to profit from that investment. So, like you said, or you put very nicely, from a risk-reward perspective, it seems like it's a relatively more attractive investment compared to other companies in today's market thus far. Yeah.
With any kind of investment that is not part of conventional wisdom,
Right.
there'll be a lot of fear, uncertainty, doubt.
Right.
What do you feel is the biggest myth about Alibaba?
Right. I think there are two myths, or not two myths, but two more common misconceptions about Alibaba. Not saying that Alibaba is not the Amazon of China. So firstly, I think JD has a more similar business model compared to Amazon. They build warehouses, they look up their logistics capabilities, and they reinvest back into themselves. So they have a huge capex, which is capital expenditure, back into the business. But Alibaba, as the DNA of the company, is a lot more asset-light. They like to provide the platform. So they really function a lot more like Facebook, if I can put it that way. But of course, there are kinks and nuances in business model. So that's one. And on point number two, I think more on the macro environment. If you were to look at it, the common rhetoric and the common narrative right now in surrounding Chinese equities, right, would be, oh, the crackdown or the entire regulatory risk right now is because the government fears all these big tech companies or big tech conglomerates. I do pose because I'm an investor, of course I take the opposing side. I don't think that it's because of the threat of power or the threat from all governments. Personally, if you have been studying or looking into China specifically, power and money, or power and wealth, is of two different concepts. They don't intermingle. So unlike the US, you can lobby the government. You can. I'm not accusing them of like lobbying or corruption, etc. But I'm just saying that in China,
Or is he?
right? No, I don't think so. But I think specifically more in China, power and wealth is two different concepts. So those in government or those in governance, those in the CCP, always have a higher regard compared to those businesses. So I think I have no doubt that there is no threatening in terms of power. So a lot of the crackdowns and regulations, because I've personally read some of the papers that the government actually issued, it focuses or it revolves around three key areas. Number one is about the algorithm recommendations. On point number two is more on data privacy. And on point number three is more on anti-monopolistic practices and procedures. So if you have to look at it, actually these three common themes are everywhere. They're in Singapore, you have your PDPA Act, in your European Commission. So it's just normal. But because the Chinese did it, then it's a bad thing. Like the Chinese government don't know how to regulate, they're crazy, they're illogical. And I don't buy into those arguments, which is why I'm personally I have a lot of vested interests because we have that inherent opposing view in specific in this issue today. So yeah, that's I think the general two misconceptions that people have surrounding Alibaba and Chinese equities by and large.
Agree.
Right.
For you as an investor,
Right.
it's important for us to always have a critical view of what we invest in.
Right.
Personally, what is your biggest criticism of Alibaba, the company?
I think for those of you who actually did watch Daily Journal Corporation, so it's run by Charlie Munger, and like Daren pointed out, Charlie Munger was a huge investor in Alibaba. He recently doubled, even tripled down in his Alibaba position, and even went on margin, for those of you who don't know. So it seems like his conviction is huge, but he actually alluded to one fact, and that was also my initial concern about Alibaba as a company. If you were to compare Chinese tech conglomerates with their US counterparts, so if you compare Alibaba, Tencent, Meituan, Baidu to their Google, Amazon, Facebook, Apple, of the likes of those similar tech conglomerates, they are not as entrenched, and I totally agree, and I fundamentally agree. It's true that if you ask any Chinese national or anyone in China, you pick up their phone, they have two specific apps that they definitely have. One would be WeChat, and number two is probably something from Alibaba, which is Taobao or Alipay, for example. So those two apps or those two big companies, which is your two dragon heads, which is Alibaba and Tencent, is deeply, deeply entrenched in the Chinese lives. But that being said, if you were to compare to their FANG counterparts, the scale is definitely different. You look at it from an objective point of view, it's true that economic mode and in terms of
She's still not very dog friendly.
We're here in Botanic Gardens, so you see a lot of nice doggies
Right.
walking around us. It is actually about Sunday morning at 10 a.m.
right.
My towel is here because it's super humid in Singapore. It's always summer here or
Right.
heavy rain.
Right. So back to my biggest criticism to the company specifically is I know that the economic mode is not as entrenched.
Yeah.
There are levels of economic modes and how they fend off competition. And Alibaba is definitely feeling the heat because you can look at their margins shrinking, they're losing market share. But that being said, they're still growing at a sizable clip because of the massive amount of tailwinds in the industry, which is e-commerce and cloud as well. So those two seem to counteract some of the forces that is pushing the company thus far. But on a fundamental level, that's true. I think economic mode wise, they can't compete with the fangs of the United States. But that being said, there are multiple facades to a company. So it doesn't mean that it's the best company in the world or it's the most innovative, means that it's the best investment. Because as investors, we always look at it from a risk-reward perspective. So if there are ability for it to continue multiplying and compounding internally, then it's from a risk-reward perspective, you adjust it according to your own risk profile. So that's my understanding, and that's how I look at the investments that I have thus far.
To bring a point that there's multiple facades to a company,
Right.
one of the determinants of long-term success,
Right.
beyond the products, the technology, the patent,
Right.
are the people.
Right.
Do you have a point of view on how attractive Alibaba is as an employer to top talent in the
Right.
industry?
Actually, I fundamentally agree. It's a very tricky situation as well because let's say I put two talents in front of you, you can't really ascertain unless from their results or from their past experiences. That's how the people relations team is important. I won't speak so much on how they're going to attract talents or the up and rising, but I'll speak more about in terms of the management team and the execution thus far, because that's also something that investors like to look, right? They like to see the track record. So if you were to look at Alibaba as a company, they're currently dominant in 4 industries. So e-commerce, finance, cloud computing, and logistics, right? So out of this 4 industry, I'm not going to speak for the logistic arm because I'm not very in tune with the Chinese logistics or logistics industry. But I can tell you that out of the 4, they're dominant in 3. So they're essentially the market leader. And not forgetting that the rest of the other competitors in the space are no small feat. They're not some newly minted tech companies. You have your Tencent, your Huawei, your Baidu. So all these are all strong competitors as well. And Alibaba just happened to come out on top. People can say that it's by luck, but I think if you can do it with a track record of out of 4, you are dominant in 3. It proves and it speaks volumes in terms of their execution and in terms of how the company is able to navigate, especially through such uncertain times when the government is illogical and not knowing what they're doing, but yet at the same time they're able to dominate all 3 out of the 4. So in e-commerce, they hold around 40-50% of the market share. Cloud computing, they hold also around 38% of the market share. And even in the finance arm, digital payments, they hold 50-something. Even Tencent's WeChat is only 40-something. So in this case, I can't really not give the management team the credit and looking at how they have executed thus far in the last 20 years. So that's my take on the execution and in terms of the management of the company. Yeah.
One challenge to our viewers here is to think critically about what Chi Keng and I are saying. Chi Keng he's an Alibaba investor, I'm a Tesla investor. We would be biased towards this company. We have a
Right.
vested interest. And just because a company is very big doesn't mean that it's going to be successful. In the year 2000 to 2010, Nokia was the number 1 phone company in the world. Today, Walmart's the number 1 commerce company in the world, retail company in the world. Does it mean that they're the strongest in the industry? Not necessarily. The difference here is that for a lot of Alibaba's business, there are network effects
Right.
because of the software, the payment system. So it's a bit more powerful compared to just a Nokia phone.
Right.
Or going to Walmart.
Right.
You can walk to any other store. But still, do your own research. Big doesn't mean better.
Right.
When Elon Musk started SpaceX, everyone criticized him.
Right.
What do you know about building rockets? You know
Yeah.
nothing about it.
Yeah.
So take your own view on that. For investors and for your personal side, what's your entry and exit strategy for Alibaba?
Right. So I think personally, because I always look at any forms of company, I always look. It's a three-step process, right? Number one, you find decent enough companies, good enough companies that are performing, that are executing well. Number two is you have to always get in at a decently good valuation. So you try to not overpay your investments. Because even likewise, I wanted to add on to just now the discussions or examples that you gave. I think Microsoft, after when Bill Gates stood down or when he stepped down as the CEO, they had their lost decade. So they were trading sideways for a good 8 to 10 years when I forgotten what's his name. I think it was
Steve Ballmer.
Yeah, Steve Ballmer. So Microsoft was trading sideways for a good 10 years because of management. And is Microsoft not a good company? Look at where it is today. So in essence, there are a lot of risks and it's investing into the stock market is an uncertain endeavor, and you have to get comfortable with this uncertainty. Today, Alibaba might be executing, Tencent might be executing. They are very good in capital allocation. But tomorrow, if they switched over and something happened to the management team and they're not thinking clearly, there goes your investment as well. So that's what I wanted to add on. So being a good company today does not mean there will be a good continue being a good company tomorrow. So that's that part. Then back to the question on what's my entry and exit strategy. I usually do it's very lame, but you do a discounted cash flow. You look at whether what's the valuation and stuff like that. I do have an intrinsic value calculation of Alibaba at least around 200. Even at the most conservative estimates, it's at least around 150 to 180. So that's my intrinsic value calculation. And in order for me to enter, of course, you need to have a margin of safety. That being said, because I value the company at 200, so my cost price currently is at 150. And of course, the market loves to prove you wrong. So at its peak, I was down around 50% of my investment because it went to $70 odd. So right now, I also had a question from one of my viewers asking, so when are you exiting? So if Alibaba today shoots back up to 200, are you going to sell because you essentially profited 30%? I think not so much. In order for criteria to sell, there are a lot of criteria in order to hit. Number one, after you sell, what are you going to do with the money? Do you see a better investment opportunity elsewhere? Having a better investment opportunity or a better company out there is not the only benchmark or criteria, right? You still have to see whether it's a good valuation, do you understand the company enough, and the list goes on. So investing is not like, today I know that Adobe is a good company because they have a huge economic moat. Nobody can disrupt them and they're the only space and they're the best SaaS company. But is the valuation attractive? Am I overpaying for the business? And do I really understand what's the economic mode? So those are the questions that you have to answer. So right now, I think I'm going to hold and ride the entire Alibaba wave up. Of course, there are a lot of tensions and pressure surrounding the basket of goods, especially delisting, the US-China tension, China economy slowing down. So I don't think it's a quick flip. But of course, if today you tell me that Alibaba just shoots up to $500 or $600, yeah, then I'm probably going to realize my profit and exit the position. So there are a lot of criteria and yardsticks in order for me to hit that criteria in terms of exit opportunity. But if not, I think that I'm generally going to ride it out. And if the market slowly reflects the fundamentals and the price of Alibaba, then I'm probably going to sit together with the company and management team and ride it out. If there is no touch wood, there is nothing that happens, and if the VIE structure is still there, rather than the government rug pulling us. Yeah.
What I'm hearing now is that your current intrinsic valuation for Alibaba is around $200.
Right.
Because you need a margin of safety, probably any price below 150 would be a buy for you. You'll
Right.
still continue accumulating over
Right.
time.
Right.
And you will not sell immediately even if it goes beyond 200.
Right.
Because one, intrinsic values can go up. Valuations do go up over time as businesses' fundamentals change. So probably at least before the $500 range, there is no compelling reason to sell.
Right.
And as you call out, unless you find a much greater alternative investment.
Right. From a risk reward perspective. So also I wanted to add on sure, there are a lot of greater companies out there in comparison to Alibaba. I believe Apple is likewise, Apple is a better company than Alibaba. But that being said, I think from an investor's perspective, there are a lot of things to consider and a lot of factors that come into play and come into mix as well. Doesn't mean that I even if it's the best company, objectively, if you can find a best company in the world, I'm not saying that Alibaba or Tesla is the best company because we are all biased in our own aspect. But buying the best company at a sky high valuation will probably not yield good enough returns as an investor. So that's just one caution. And as to if the discussion later on, if you were to talk to me about sky high valuations, right? Execution risk is a very important factor that people can't really quantify. It's the same as regulatory risk, right? How do you quantify CCP's involvement? Do I slap a 10%, 20%, 30% discount? Nobody knows. So that's the uncertainty that we have to get comfortable with in this instance.
Agree.
Yeah.
So now we're going to pivot to Chi Keng's investment philosophy.
Right.
How's your investment philosophy changed in the past year?
Right. I think not so much in the past year. I think in the past year I've been, while everybody is having a bull market run, I'm having a bear market run, because if you were to look at it, I do concentrate my portfolio to a large extent. A huge part of my holdings, I think now around 85 to 90%. Likewise in Alibaba, and I think Daren invests largely in Tesla as well.
Yes.
So while everybody is having a good bull run, I'm experiencing a bear run. So I think rather than changing in philosophy, because I think ultimately how the process and the steps and the methodology in picking stocks and investing, it's the same. But I think one important or key lesson that I took away is sometimes when people are extremely optimistic, because I was also invested in Alibaba, and then I look at the entire US market running, I was thinking, hey, there are so much funds in the market. Why is nobody flowing back into Chinese equities and Chinese stocks, right? The funny thing is, don't underestimate how long the market can stay irrational, longer than you can stay solvent. I think going down, a good friend of ours as well, Bunti, he plotted the graph. So when the whole world sanctioned Russia, right? The entire Russian stock market came down by 70%. Alibaba, during that same flank, they dropped even more than Russia. So in this case, Alibaba is worse than having sanctions on an entire country and an entire economy. So which is why I felt that sometimes patience do pay, especially when you are in a downtrending market. And I do learn that it's always in terms of position sizing and in terms of how you enter the position. And are you okay when, like Peter Lynch also point out, when it's down 50%, what are you going to do? Are you going to buy more? Are you going to sell? Are you going to... Do you even understand the company that you're buying? So that's when conviction really goes into play, and how you are able to ride out the entire volatility of the market, which actually makes the market interesting and so the entire journey is so fruitful in this case. Yeah.
Agree. The line between conviction and delusion is something that we need to be very self-conscious about.
Right.
And going back to first principles, is the fundamentals of the company strong? What has changed for the better or for the worse? And sometimes it's quite grey.
Right.
We've just changed location because the sun has been following us everywhere we wanted to go. So let's continue. Chi Keng, when you think about investing philosophy, crypto, stable coins like Bitcoin,
Right.
in the past 5 years have generated a 38 times return.
Right.
So how does that fit into your long-term investing portfolio?
Right. I think likewise for a lot of cryptocurrencies, I think not only talking about those big players out there like Bitcoin and Ethereum, I think a lot of all the interesting new and uprising innovative projects, they're all trying to solve a certain problem in traditional finance. And personally, I'm in finance, so I'm looking into some of the different projects, and because some of my friends are also crypto enthusiasts, so we usually exchange opinions, and I think it's more, rather than calling it exchanging of opinions, it's more of me asking a lot of the questions and they providing me with the answers. But that being said, I think as an investment instrument specifically, I personally am more comfortable if I really fundamentally understand that instrument. And likewise for now, I don't think that I'm extraordinarily confident about going into that specific investments. So currently I don't have any crypto exposure, and I know that it's a little bit weird for someone at my age, because you see that there are a lot of crypto millionaires that are in their teens, 18, 19, some in the early 20s. But personally, I'm not really dabbling into all this more interesting and innovative projects, because of really just based on the sheer knowledge in that space specifically. So yeah, I'm not very big, or I'm not really understanding the DeFi space, Web 3.0 and all the fun zing stuff in that space. So yeah, personally I'm just not very comfortable now. But that being said, I think as an investment instrument to hedge your position, to increase exposure, and maybe even like some of the bigger creators out there saying they're limiting your exposure to maybe 5-10% of your portfolio, I don't think it's necessarily bad advice. I think it's a good rule of thumb to follow if you really want to really just dabble into it and to understand the space a little bit more. Yeah.
So what I'm hearing is that right now, not for you.
Yeah.
And it's okay.
Yeah. Yeah.
We don't need to invest in everything that the people around us invest in.
Right.
Our goal is ultimately financial returns above inflation. For many people, financial freedom.
Right.
How you play, it's up to you. And so, one thing that's very valuable for Tesla investors is we often feel, are we living in an echo chamber? So it's always good to have an outsider's perspective. Now we're going to pivot to Chi Keng's view on Tesla. To begin with, some people feel that the world of Alibaba investors and Tesla investors are like night and day.
Right.
It's like Mars and Venus.
Right.
What's your take?
If you adopt a more academic approach, if you were to really study the profile of the different investors, people that are interested in Alibaba are probably more of that quote-unquote old school value investors that don't understand growth, they don't understand innovation. While on the flip side, people that invest in Tesla usually also invest in more innovative companies like Palantir or those higher growth companies that maybe are not that profit making. I'm not speaking about Tesla, but maybe companies like C Limited, for example. So in that instance, if you were to look at it objectively, it's true that the investment psyche of this different basket of investors do differ by quite a fair bit. So, which is also why there is this connotation, or there is this understanding that hey, usually if you invest in Alibaba, you won't touch Tesla, and if you're a Tesla investor, you won't touch Alibaba. So that's just my general gist and general take. And yeah, I do run a small Discord channel. We do share our holdings and investment portfolio from time to time. I would say that a small percentage do hold both investments. I think it's really based on your understanding of the company, and some of them just feel like they understand both, so they think that both also provide their own required internal rate of return, so they're comfortable with holding both. But yeah, I do understand why there is this disconnect in terms of why each of us are biased to one specific company or one basket of companies.
So to build on that, as an outsider, what's your view of Tesla as an investment
Right.
and a company?
Right. Tesla is probably one of the most innovative company. I've been watching a lot of videos talking about full self-driving, speaking about some of the internal parts, and how the days of iteration is insane, like the rate of innovation and the rate of how they change internal parts and stuff like that. I'm not going to comment as an investment because I personally feel that I'm not in the position, because I don't understand well enough the fundamentals of the company. I don't know too much about this FSD, what's the level of FSD. Even though I do listen a little bit more, because I'm quite in tune with some of the China developments. You have companies like Baidu, BYD, Neo Xpeng. A lot of them are also in the space competing as well. So if we talk about it from a company perspective, I think it's a great company. Elon Musk is such a charismatic leader. He knows his way. He doesn't do marketing. He is the head of marketing, or the entire marketing team for the company. And despite controversial, but he do have his own take, and you have to give credit to the man himself. He did so much impossible tasks. So I have respect for the company. I have respect for the management team as well. But maybe for just to echo some of the concerns that I usually hear, specifically or revolving around Tesla as a company, I think number one, when valuations are sky high, you do run into some execution risks, some key man risks, and some issues with what are the expected returns of this company or this investment specifically. So because like you rightfully pointed out, when we invest in a company, we just want to earn money, right? We have an internal rate of return that we wish to achieve, or some people in the finance space call it hurdle rate. So in this case, if you think that Tesla is able to execute growing 50% year on year for the next 3 to 5 years, you're able to calculate your own projections, how much FSD, what are the margins, what's the take-up rate, stuff like that, then sure, go ahead. I think that's you're probably investing in one of the most innovative companies in the world. But that, like I said, buying good companies is just one part of the equation. We have to take into account the valuation and the expected returns thus far. And I know Tesla being overvalued is a very common bear argument. I don't think that I have additional, there are new perspectives or insights that I can bring, but maybe just to share some of my opinions, or I read it somewhere before. Back in the days when we were talking about automotive companies, right? So we have your Ford and stuff like that. Then what happened probably in the 80s and 90s? That was when the Japanese car automakers, right, came to a huge popularity. So you have your Toyota and whatnot. In this case, let's not forget that even though they are able to execute well now, doesn't mean that they wouldn't be disrupted in the future. So being a good company and being the best company in the world does not guarantee you the ticket to success. There are still a lot of kinks and nuances that have to be taken into account when you're investing into a company. So I think likewise, sure, you can say that Elon Musk is a great visionary and he's going to bring entire humanity to and bring us to new frontiers. But that being said, as an investment, I think when you price things to a huge extent and to perfection, your downside risk is you are exposed to a huge amount of downside risk as well. So that's just why I can understand why people are uncomfortable. While at the same time, on that same note, people will think that hey, this is the best opportunity of our lifetime. So that's just my 2 cents.
Thank
Yeah.
you. While Tesla has served investors well so far, if you
Right.
invested in the past 5 years, it's a 17 times return.
Right.
We must be mindful of our blind spots, not for the sake of creating criticism or blind spot, but just to be fully aware of what's out there. Earlier, when Chi Keng talked about companies like Microsoft, we think about Apple. I invest in Apple as well. When a lot of people say not just overvaluation, but say key person risk. If Elon Musk leaves, some people say it could be like Apple, right? After Steve Jobs left, Apple valuation went up by 13, 14 times
Right.
in the decade since Tim Cook took over. But it could also be like Microsoft.
Right.
After Bill Gates with Steve Ballmer, valuation was flat for actually about 13, 14 years before Satya Nadella came in.
Right.
Any other blind spots that you think we should be aware of, especially in the long term?
Right. I think maybe just to share some of the perspectives as well, because I'm more, I have a more strategic interest, if I can put it, in China investments and China specifically. The reliance on Tesla or some of these automakers and EV on China is actually quite substantial. I don't have the stats right at the back of my head, but I do read some reports from time to time. And especially when competition is intense, China being probably one of the more competitive countries as well, they have a lot of innovation that's coming up as well. So rather than focusing on what's Volkswagen gonna do, what's BMW gonna do, I think China is also a very interesting space to look or to watch out for in terms of even ranging from battery swap technology from NIO or even to full self-driving from Baidu, which is probably up and running with their Apollo arm. That being said, competition is one. Number two is the reliance on materials, I guess. I think that's also one of the more core concerns about China providing some of the raw materials and like battery components. I'm not too sure about the details, but I'm just saying because of this increasingly globalized world, everybody's tied into this entire mess together.
Yes.
So when the US-China tension bumps up, doesn't mean that even Apple, they have 20-30% of their revenue generating from China. So if C, like you guys, like a lot of you guys like to say on the online space, C is irrational, he doesn't think, he doesn't know what he's doing. If he's really that irrational and he flips the switch and say that, okay, Apple doesn't get to sell their phones in China anymore, that's a 20% drop in top line revenue and your bottom line is all going to be affected. Everybody is going to be thrown off. So that's something that we always have to keep in mind, even though you don't have direct China exposure, but you have to be a little bit more mindful when you spread this kind of narrative and rhetoric and get people all riled up and China is the big bad enemy. But we have to keep in mind a lot of our day-to-day lives and a lot of our investments are also tied to that irrational government that you're talking about. So just be more mindful about how things are being linked and we are in this entire big web of connections and influence. Yeah.
To build on this, just add some points here. Last year, in 2021, 55% of all Teslas manufactured in the world came from Gigafactory Shanghai. 55%. It's changing this year as Giga Berlin and Giga Texas comes online to help spread out a little bit of the concentration risk. Next, China is by far the largest car market in the world. By volume of produced and sold, more than double second biggest market, which is US. After China, US, then Japan. And then the rest of the markets are much smaller beyond that. Next, 80% of all the battery raw materials in the world today come from China. Yes, Tesla is working hard to try to source different material for their batteries, but still, 80% of it comes from China. And the government has uniquely given Tesla the only auto company in the country to be fully owned. Before that, you need to be joint venture. But what can be given can also be taken anytime.
Right.
And as you've seen in the recent Ukraine war, Starlink has strategic military applications. There are 2,000 satellites right now. In the next few years, there'll be 10,000 Starlink satellites. So the government's interests and Starlink and SpaceX, there could be tensions, especially when it comes to the world of politics.
Right.
My take is, make love, not war.
Yes.
Chi Keng, thanks for sharing your views on Alibaba. for us on the other side to get to know it a little bit more. If we don't understand it, seek to understand. Like Elon Musk always says, use first principles thinking. Just because we don't know it doesn't mean it's worse or better. We really need to spend some time to discover. Thank you for sharing your investing philosophy
Right.
and also your views on Tesla. That's valuable.
Right.
Otherwise, every time it's Tesla to the moon! Yeah, that's not very helpful for all of us all the time. Sometimes it's okay. With that, if you found this video useful, please click the like button. Hit subscribe to stay updated to more interviews like this. You will find a link to Chi Keng's YouTube channel in the video description and in this end screen. Take care. Bye bye.
Bye bye.